Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Wednesday, September the 5th, 2012, and here is today's After the Bell market summary. I wanted to first off by taking a look to see how the indices closed here. The Dow Jones closed down a little over 11.5 points. The NASDAQ closed down just about 6 points here, closing close to 6 points, closing down 5.79. S&P 500 closed down a point and a half. Taking a look at the breadth today, we had 2,578 issues advancing, and we had 3,341 issues declining on the NYSE, the NASDAQ, and the AMEX. We did have some movers and shakers today, though. The Goldman Sachs was a strong stock today. Disney was pretty well today, and LinkedIn was strong today as well. Plus a couple other stocks that were in play that made some decent moves off the lows. In any case, let's go ahead and get into the charts here. I want to start off first by taking a look at the NASDAQ. The NASDAQ is clearly trading in a defined range between 67.37 and call it 69. Right now, what we're looking for is a move, really a move over 69. But if we were to break above this little downward trend line right here, that will definitely give us some positive action as well to make a move towards 69. And then possibly higher to new highs. The level you want to be watching for tomorrow is obviously going to be today's highs, which also lines up with yesterday's highs around the 68.35 level. And then we have the 68.69. Then obviously just call it 69 level. Really want to see the stock take out this 68.88 level though, 69 or so. All right. As long as we can continue consolidating above 67.37, then this action for the past 2.5 weeks here has to be taken as a bullish consolidation, as the trend since the lows that we made back here in June is still higher. And if I was to add the moving averages right here, you can see that we still remain above the 20-day simple and exponential moving average, and just trading sideways on the faster time frame, such as the 8. All right, taking a look at the SPY, since I know a lot of you guys track the S&P 500 via the SPY. I track it via the SPY and the ES. If you guys come in the chat room, which is mywallstreettv.com, password to get into the chat room is SMART, you guys will see that I track the ES intraday. In any case here, the level to watch on the SPY to the downside that we continue to watch is this 139.82 level. Call it 140. I mean, obviously, if we hold below 140 intraday, I mean, on a day where everything's looking kind of weak, then you have to expect we're going to break below 139.82. So call it 140, the level to watch. If we break below 140, the next level you have to watch is 138.81, which lines up with the 50-day exponential moving average on the daily chart. Same with the same with the NASDAQ. You want to keep an eye on this little downward trend line right here that you could draw in from the highs that we made. And that's going to be used as a momentum trend line for some traders that are waiting for this market to push to the top side. I mean, if we were to get a break above this trend line, you would have some traders come in and slowly start buying. And then if we see that buying pressure increase, they're definitely, and a break above 142, then they'll definitely start buying. One thing to look out for though is a possible fake breakout and then a close, like a little action, like a candlestick like this, where we break out, we open down one day, tomorrow or sometime this week we break out and we come right back in below that trend line, or we break out above 142 and then we close below 142. That'll be something to keep an eye on for a possible trap. But all in all, as long as we hold above 140, all right, this is some decent consolidation off the up move that we had off the June lows, and the top range is 143. So keep an eye on that. We still continue to chop around this range, but 142 is the next momentum level to watch for a move through on the SPY, for a move back up towards that top of the range there, 142. And then 140 to the downside. Taking a look at the ES, as we have been maneuvering pretty well using the S&P 500 futures chart again, which is what we track intraday on an intraday basis. And you guys can see that via our midday market update videos that we do, that we put out before 1:30, 2 o'clock the latest, but mostly before 1:30 on the YouTube channel. And I would highly recommend that you subscribe, as we have a lot of good stuff going on over here, and you definitely want to be a part of it. In any case, you guys can see we are still holding this key trend line that I've been highlighting for the past month or so, even longer than a month, from this little breakdown of the head and shoulders pattern that we had from back in April and May. All right, remember earlier last month we were waiting for the market to get above that trend line. First attempt, we failed, came back, broke above it, consolidated, had to move higher. We had that little reversal bar from 2 weeks ago. As let me zoom in here for you guys. We had a little reversal bar from 2 weeks ago, and right now, look, every time we go below this trend line, they buy it up. That's one right there. Again, they buy it up. Two, gap down below it. Three, four. Notice how many times this key trend line is coming into play from that neckline, from the head and shoulders pattern breakdown. All right. If we continue to hold above this key neckline going into the rest of this week here and into next week, I would have to assume that this is just bullish consolidation around the 1400 level, that they're trying to shake some people out below the 1395, around the 1395 area. But now we have to define the range as 1395 or so, and this upper range. Let me clean this up a little bit here. Define the range as, say, this 1395, and then this 14, say 16 area. Intraday for the past week or so, the 1412 area, 1410ish area has been the area that we've been watching as well as the intraday resistance. So keep an eye on this. You can see we still remain above that key trend line that we've been tracking for you guys there. All right, taking a look at the IWM small cap. Small cap showed some great strength yesterday compared to the other indices. And today they held up pretty well. They held up in the upper 38.2% range of yesterday's action. Again, like I told you guys previously in the past couple of videos, as long as we continue to hold above 8203, you guys can look to the left of this chart right here and see there's really no congestion inside this little area that I don't have highlighted. Okay, so therefore, if we were to get a nice update tomorrow, this thing could have a nice igniting move up above 83 or so. All right, we all know we have the ECB coming out tomorrow morning with what they have to say, and tomorrow is definitely going to be a market moving day where a lot of stocks are moving, a lot of indices are moving, and it could be even a great day just to play the indices and not the stocks. We'll see how it sets up. Obviously, we look for opportunities intraday in individual names and sectors. So anyway, buy signal on the IWM above 82.51 should take it up here towards 83.30. That looks as if it wants to be the next target. And as long as we continue to hold above, say, 82 or even 81 down here, this lower band right here, which I need to change to green since we're actually trading above it. Give me 1 second. Then we should be in good shape. The small caps are, trying to show some strength along with the other indices. All right, and that has to be noted as a bullish sign a little bit there. Even though some things are breaking down, some sectors are breaking down, and some sectors are breaking out. The social media stocks were trading pretty well today. Let me bring up the moving averages back on the chart here. Before I go into individual stocks and sectors, let me run through a couple more things here. Taking a look at the dollar. All right, I highlighted in the weekend video how the U.S. dollar was coming down into the support right here from the 200-day exponential and simple moving average on the dollar futures chart, which is around 80.86. At the same time, we did break this little upward channel, which of course these upward channels usually resolve to the downside. As you guys know, for those of you guys that have been in the chat room, we look for these setups intraday on the smaller time frames. That was fast. And if we continue to remain in this downward channel, all right, and we get that selling pressure on the dollar like we've been getting, then you could see a move below the 200-day moving averages here on the daily time frame. That could definitely cause some more selling on the dollar. Taking a look at gold today, I'm just going through the whole sector here. So I got my Camtasia running, I got my new headset running, so hopefully everything sounds much cleaner and crispier. And gold futures, nice move up here. We're huddling underneath the 1700 level. If we can consolidate a little bit more up here and stay above, say, 1687, we can make a nice move above 1700. I have my next target on the gold futures, or just the regular gold contract, per se, is 1720 up here. We are a little bit extended from the 20-day moving averages, but at the same time, we are cruising the 8 EMA and SMA on the daily time frame. Taking a look at crude oil via crude oil futures /CL, at least in my little platform right here. Crude oil futures holding above 94 and consolidating in a range between 94 and 98.29. Still has to be looked at as bullish action unless we break below 93.95. And volatility, where is the volatility at? Volatility has been slow. I'm pretty sure we'll pick up some nice volatility tomorrow after the ECB news. Right now, as long as on the volatility side, if we remain above 17 on the VIX, and we continue to hold these 8 EMAs and these moving averages down here, that has me thinking we're going to maybe make a move up towards 20. Obviously, if that happens, that means we're going to get some selling pressure. So we'll see. We do have a little short-term top from yesterday's action on the VIX. So a break above 19 will definitely trigger some buyers in the volatility index. Therefore, hence, I am putting a an alert above 19. All right, so that's that. Now to the stocks. LinkedIn slipped the radar today. Was not able to pick that sucker up. I should have had an alert in there, but I didn't. But LinkedIn definitely a stock to keep on your radar. Stock looked like it wants to go back to the all-time highs here around 120.62. Obviously, that was some good action there. Facebook, like I tweeted out earlier today, Facebook finally had a day where it gapped up and held its opening gap, and it held the previous day's highs. Once we noticed something different, we told the traders in the chat room to watch the Facebook for long. They were able to profit on that one. Another stock that we traded today was FedEx. The main level to watch on FedEx was 86. The reason why I say that was because I had some channels on it from before. As you guys can see here, this little channel right here, my lower band channel. I draw my 50% channel. So when I saw it this morning, it was gapping down right into that 50% channel. So the whole time here in the morning, in the first say half an hour, I was looking for a reversal. All right. Not only that, let me take off these drawings here. Not only that though, but you can see there's a lot of support from back here in early June at the 86 level. So when we have something set up like this, I like to call it the above and below method. You know, that's our inflection point. Above 86, we're looking to go long. Below 86, we're looking to go short. At the same time, we're looking for held bids above 86, held offers below 86 if the market's starting to get weak. So with using those using that mentality thinking in our toolbox intraday, we're able to capitalize on these trading opportunities. And if I bring up the FDX here with the extended session showing here from pre-market, you guys can see that key 86 level, right? We kept on holding above. The market was pushing down a little bit, and FedEx was actually holding up pretty well. I highlighted the fact to the traders that we had a lot of volume go off, as you guys can see here. All right around this 85.80 area, and at 85.80 in the first 15 minutes, we noticed a held bid that was taking place on the tape. All right, and hopefully I'll be able to start showing you guys some tape reading videos and stuff of that nature. But once we recognize that 85.80, I highlighted the traders. All right, if we break above 86, it's long. I got long at 86.03, and if you follow me on Facebook or follow me on the Twitter stream, you would have been able to participate in that trade. All right, and stock really gave you no pain. We kept a tight stop. All right, we first had our stop at 75 underneath the 80, and then we were able to move it up underneath 86, and then just trail it from there. Really never gave you any pain at all, as 86 was a major level to watch on it, and it got respected as such, and that was your trade. I know some traders probably caught the reversal right here, but we were focused on the long side for the trade to buy the dip in the morning off the analysis we had from the daily time frame that I just showed you guys. So that's really about it, guys. A lot of action is going to come tomorrow. So hope you guys had a great trading day today. Please remember, if you have not been to our website, come check out our website, wallstreettrading.com. Join us in our chat room at 8:30 a.m. where we go over the pre-market ideas and what's moving, what's shaking, the gappers, the news, all that other good stuff. And to access that chat room, you want to go to mywallstreettv.com and type in the password SMART. We're also on Facebook at Wall Street Trading, and you can find me on my personal website at channelguidetrader.com. I hope you guys had a great day today, and I look forward to seeing you guys tomorrow morning. Thank you very much. Channel Guy Trader checking out.